me to welcome on stage Vijay, who's the director at Arenco and Golden Sand Hotels. Vijay. How are you, Vijay?
Nice seeing you.
Good. And our next speaker, Coley, Brenan, partner and head of Europe KSL Capital Partners. Hello, can I have you? 15 minutes, 18 minutes, there we go. So aligning growth strategies for asset owners. I think we're going to look at it a bit from the prism of customer satisfaction versus the asset owner success. So as a quick introduction, I think it's very important we understand that we need to balance how your customers feel in the properties and still have a robust performance for asset owner, hotel owners, and what potentially are those factors affecting the value. So first question for you, Vijay. How do you really define growth in the hospitality sector? Is it more about looking at the customer satisfaction as a priority or expanding the portfolio and the owner return as a priority?
Thank you. Good to be here again. Yeah, I mean, of course, I'm here from the owner side. So ultimately, everything boils down to the value of the assets. But what's more important to get the value of the assets up where we want to is to keep a customer happy. A happy customer leads to, these days, more remarks, positive remarks on social media that drives traffic back into the hotel. We actually measure the repeat customer ratio, which is quite high in many of our properties. And a happy customer means better bottom line, healthier balance sheets. So it's a perfect blend of both.
Okay. And Coley, from your side, how do you think the geography, wherever your asset is located, impact either or of the side that you're going to emphasize more on?
Sorry, how geography impacts?
Where you put the cursor between more of a customer satisfaction priority versus owner return, immediate return. Is the geography impact this in your opinion?
Sure. It absolutely is one of many factors. KSL Capital is a private equity fund. We invest in individual assets. We invest in operating companies, and we invest in businesses that are asset owners. And so we have the ability and the flexibility to look at opportunities around the world. As Vijay indicated, following trends on customer satisfaction is imperative to understand the health of an underlying asset and also the direction that you're taking it. So I don't know if one or the other is more important, that they're two of many factors.
And how brand standards and the brands that you're going to select, do you think are going to impact either or?
How do brand standards?
Brands that then followed by the brand standard of what the brand really mandates for you to have on property.
Sure. From our perspective, we have the benefit, again, with flexibility of choosing to use third-party brands. We're investors in assets that are managed or distributed by many of the brands that you see outside today. And likewise, we have the benefit and the flexibility of investing in businesses that are building their own brands. And for us, as I said, it's about having the benefit of flexibility and making the right decision for any given asset. Often it is dependent on what the geography is, who the customer is, how global that customer is, understanding brand awareness across your options within traditional distribution partners, or how you can build brand awareness in your own brand.
Vijay, how do you see the integration of technology to kind of maintain the satisfaction and yet turbocharge the return for investors and owners?
Yeah, technology is, of course, the most rapidly changing factor in all the hotels. Sometimes we feel that we get a request for a huge upgrade of, let's say, the IPTVs or the HSIA in the hotel, which is not even fully depreciated in the books because it was just done a couple of years ago. But we have no option but to do that because the Gen Z, the Gen X, whatever they call, they are discerning customers. They do not want a minute of Wi-Fi drop. So we need to obviously cater to the needs. And of course, coming back to keeping the customers happy, that's the ultimate secret in keeping the assets healthy.
I think, Vijay, you have a very interesting situation there where you have two different brands.
Oh, you too. Okay.
Next to each other. And how do you see their customer satisfaction actually impacting your bottom line?
Sure. You're probably the 42nd person today asking me this comparison. And we have a classic case, which is a boardroom discussion point in both the big brands, we understand. And of course, both of them are giants in their own field. Together, I think they command about, 400 million loyalty members. So the customers are quite keen to get the best of standards. And the advantage we have is, since they're just next to each other and both have identical product, we can really feel them literally on the toes chasing each other to get one upon another. And that's a month-to-month kind of change. That's what we wanted, actually. Thank you.
Coley, from your side, when we look at sustainability, how critical is it for you, again, to be able to balance both what the customer's expectation is and grow your asset value? How do you integrate sustainability? Do you integrate it the same way in all regions and all investments that you have? Can you tell us a bit more about this?
Sure. Yeah, it gets tricky when you start to look at it through the global lens. But ultimately, because by that I mean there are different restrictions, laws, and expectations within the different communities around the world. But the flip side of that is there's a common theme and a common demand from a consumer base. And more where we're investing our capital, it's on global markets with globally recognized brands, where you do have to align the business, the brand, and the operation with customer expectations. So that's one side. The other side is we're not a permanent owner. We're a private equity fund. We're an institutional investor. We're typically taking, we consider a long-term hold, but we're always looking at an exit, which means we need to understand liquidity. And so sustainability is a kind of ever-increasing factor when you're considering overall liquidity for any underlying asset or business.
Mm-hmm. And moving on to a little bit of another point, where do you think, Vijay, to start with, do you have any specific example where you have clearly prioritized guest satisfaction and the result was actually the positive referrals and the satisfaction of the service and understanding of the brand, but actually you had a much stronger bottom line result than expected because you just focus on exactly what the customer wants?
Yeah, I mean, we have a property which starts its 25th year of operation on the beach today. And the percentage of repeat customers for that hotel has always been in excess of 30% during the peak season. While I may not have a specific example of a customer. So we have about 150 rooms on a regular basis out of 400 occupied by repeat customers. That's the hallmark of the location of the property, of course, the quality of service, and it's a mix of all that going forward so that we're able to keep that ratio for so long.
And when it comes to navigating the customer trend in your investment, and I think I'll ask this question for Coley. When you have to call for renovation or changes, how do you kind of measure this importance of capital expenditure and the positive impact that you're going to have on the guest experience?
Sure. We benefit from owning a lot of businesses outside of just the traditional hotel industry. We own a number of hospitality, family entertainment, recreation, ticketed attractions, and membership businesses. And through all of those, you have a different lens or different technology that allows you to benefit from customer feedback. I think the one where you have the most clear level of engagement with your customer are our membership businesses. So we've owned businesses around the world that in aggregate comprise 1 million members. And next to the large multi-hundred million loyalty club members, it doesn't sound like that big of a number. But when you're considering it's on average $200 per month per member that they're paying for these different businesses, it suggests that there is an incentive that the customer is sharing their feedback and that we're listening. And so the muscles that we've developed as an asset owner and an investor in that space absolutely translate to the hotel industry, where, as Vijay was saying, you need to ensure that you're aligned with customer expectations. And there are many ways of listening to the customer in terms of the feedback, but we're real big believers in double-clicking on any form of customer feedback surveys. I spent a lot of time analyzing NPS scores across our businesses, not kind of falling into the trap of assessing them from a like for like across different businesses, but more over a pattern of time. And that absolutely feeds into capital decisions and renovations that we're making in the underlying hotels, or kind of putting into the hotel brands and the hotel businesses, to ensure that you're aligned with today's customer expectation and kind of following the trend for what you think will be relevant in the future.
And do you have situations where you felt that the brand was potentially too protective, as the client, the customer is customer within the hotel, but you as an asset owner, you felt that this is going maybe a little bit too far and affecting too much the bottom line, and you have to kind of steer back and say, well, priority is still asset value and returns?
Yeah, I'm smiling. This is a situation we navigate with some regularity. So today we've got 24 platform investments around the world, and platforms, the way we think about them, are defined businesses, defined C-suite, and then kind of their own individual capitalization. And when we're kind of thinking about pulling the information, not just the weekly or monthly operating trends, but customer satisfaction scores and feedback that we're getting from the customers, that gives us, I think, a lot more confidence in where we see global trends in consumers. And that kind of allows for a fairly dynamic dialogue with management teams who may be more regionally oriented or country specific or even city specific in terms of kind of how they're building their business out. And so we can often share insights with them so that they read the data the same way that we're reading. Oftentimes, not always, that'll help kind of influence their approach to either reinvesting or kind of changing their approach to recapitalizing the asset.
And same question for you, Vijay, because you, again, clearly have this comparison, mirrored hotel side to side, where the brand may have a different approach or what they want to deliver to the customer. But again, as an asset owner, same plot, same hotel, same buildings, how do you ensure that they don't go too far because you have this perfect comparison side by side?
Of course, we work as a team, and we make sure that, yes, they are two different brands, the two largest brands in the world perhaps, but both work towards the same objective. There are many times when they have worked together as a team where there is a very large group where we have even kind of been able to get the business shared between the two of them. Yes, they go out and fight in the market, but not at the cost of each other. That's something which they've ensured and we have ensured as a team.
Okay. With rising competition in this hospitality industry, what do you think, what growth strategy has proven to be for you the most sustainable for asset owner? Your approach to growth strategy, what has changed over the past years post-COVID? How have you amended your strategy to be able to deliver the same asset return and satisfy customers on property?
Of course, COVID has been a great lesson for all of us, I'm sure. And some of the lessons we have learned during COVID, we were forced to learn in a way, is still standing in good stead, and we are able to continue some of those good practices even now. Sustainability has been, of course, one of the big changes. We have taken a lot of, the world has seen changes post-COVID in relation to the way we used to live and the way we are, especially in the hospitality industry. Of course, plastic bottle is a thing of the past. We have our own bottling plants in all our hotels. In some hotels where there is a cluster, or large hotels have their own. We have started growing some of our agricultural produce in some of our properties. Being developers, we use solar panels quite across our portfolio. And of course, when we did a recent acquisition of a portfolio of properties, which were Platinum LEED certified properties, the banks were more than willing to take up the financing, and we were able to gain access at a concessional rate of interest. That's a good thing for
you, Coley, as you mentioned, it's global investment. How do you see EHD on a global scale? How important is it for you for financing and to be able to grow portfolio?
So,
ESG.
Sure. So I think it comes down to the two elements I've referenced. You have the demand side, the customers that are demanding certain aspects of an operation or a business's positioning. And the other side is it absolutely impacts liquidity. As Vijay said, there's certainly benefits in the credit markets, but also as we think about being non-permanent owners and investors in underlying assets and companies, ensuring that we're making decisions that we think will be relevant towards the end of the decade to ensure that the business and the investment benefits from optionality.
And do you have Coley and Vijay, any specific example where you realize that you potentially impacted the brand integrity or the services over a decision that were directly stimulated by faster return and greater asset value, but you realized over months and years that you actually had an impact on the overall perception of the service quality of the hotel?
Well, since we work with international brands, it's always been a joint decision in most of the cases. While everybody understands the importance of keeping the asset healthy and keeping the returns positive for the owners, of course, we don't go to the extreme of cutting down on some of the essentials, or certainly not against compromising on quality and customer service. So
that is,
it should be a blend, yeah.
Not waiting for the brand. This is from the owner because it's a long-term business.
Yeah, unlike them who are basically private equity players, we own all our assets. The longest held asset is perhaps more than 50 years on a residential property.
From your side, Coley, do you have any example where you may feel that you went a little bit too far in getting too lean and you realized that was maybe not the right decision?
Yeah, I think the benefit of being in the hotel business, where your customer is by definition a 24-hour lessee, you have the ability to flex. And so absolutely, you've swung the pendulum too far. The beauty of the business is you can swing it back. And so what we like to do is we do like to experiment with the businesses, and maybe less of a negative impact, but more of a more positive impact. As COVID evolved and our industry started to reopen around the world, we realized that there are opportunities to create new product. And so as you thought about a customer's comfort in outdoor dining being materially different post-COVID relative to pre-COVID, that's created permanent investment opportunities as opposed to temporary investments into kind of restaurant expansions, et cetera, that have paid dividends. And we've doubled down on a lot of those around the world, where we've said, we know this works because of the renewed consumer behavior. Now let's stay there, or let's make it a bit nicer or larger.
Mm-hmm. To support your growth right now, Vijay, in all the assets you have, are you going more towards an outsourcing or in-house capabilities in all of the services that are taking place within the hotel? What is the current trend, I would say?
Well, I mean, our models are two different, where there are some properties which we own and operate under our own brands. Golden Sands is one of the oldest known brands in Dubai. And on the other side, we have much more which are managed by international operators. We choose the operator, or we take the choice based on the property, the location, and what's expected out of the property. So it's been a good blend over the years.
So it's a multifaceted decision that you take. I think we have about 15 seconds, Colin. Outsourced, in-house?
Both, all the above.
It should be a mix of both, yeah.
I agree with everything. Any question from the audience?
6, 5,
4 seconds, 3 seconds. All right, I guess it's a wrap. Thank you very much. Thank you for the speakers.